Hello and welcome to Goa 365 Straightforward. Today we have a very important and a very, plays a major role in our lives, and that is money. Money does make the world move, and every person is affected by it. Money lets you do a lot of things, and it can also restrict you from a lot of things. So today with us we have a very a professional, a veteran from the field who has had over 21 years of experience in finance. He is Mr. R. Shankarnathan. Sir, thank you so much for taking time and coming out to talk with us.
Pleasure.
Mr. Shankarnathan is also the spokesperson for Epsilon Money. It's a company that handles finances, investments and insurances, and it's a wide variety, a bouquet of different financial services. So can you tell us, speaking like right from the ground level, is the literacy, the awareness that finance has in a person's life, right from their, young adulthood, right from when they're about to leave college, enter the world of, earning and salaries and, maybe starting a business. So how far do you think right now is financial literacy come ahead? Like, do we have enough? Do we need more? Or is it sufficient for now?
Shubhashish, thank you very much for this opportunity to you and to Goa 365. Yeah, talking about financial literacy, I think we've come a long way. Yeah, from maybe a couple of decades back, the degree of awareness is much higher. In fact, just last month we had the news that one of our parliamentarians is actually talking about personal finance management to be introduced as a topic for high schoolers and middle schoolers, which is such a relevant insight. While you spoke about college days, even back in the day when we were in school as well, there was the traditional piggy bank, right? Yeah. We all grew up with the piggy bank, and that is savings. Fundamentally, that is savings. You have an extra rupee or you have an extra 25 paise in those days. Just put it in there because it will come in handy for a rainy day. Yeah, that's the classical savings model. So again, back in the day, maybe the traditional investment mindset worked excellently for us, and we were good savers. Today we need to be good investors. Move away from that traditional savings mindset and become more of an investment oriented mindset, because we've got better opportunities today. Today there are investment avenues where you can make more than what you used to make. You have got options to invest in your country, options to invest outside of your country. You've got various ways of managing your wealth. So the one is growing, the other is managing your wealth. All these avenues have now opened up in the last 2 decades. With respect to youth, youngsters who start off, as you spoke, I think fundamentally it boils down to parents. If we have instilled in them or inculcated in them that value that this is important, then they will carry it with them even when they go into youth. And then of course you have to educate them on the avenues that are available. The fact that you can do this with your money, you see it growing. It's like a plant growing. As I mentioned, you plant a seed, you see it coming up, and it's a great feeling, right? It's a comfort, it's a satisfaction. Nothing is more satisfying than watching your money grow. And I think if the youth just taste it, I know when you are young, there are various priorities, right? And we spoke about gadgets and other things, which are all important, no doubt. But if just a part of it can go into structured investments, and I mean structured investments. So maybe we'll talk about it later, how to structure that investment. It is not just about picking a fund or picking a stock. It is about having a certain strategy to the way you're doing things. If you can do that at a young age and see that money grow, then you need no further motivation.
If, like, suppose you're a youngster, like myself, in his early 20s would approach you, how would you convince, that person to, start investing and maybe, start setting aside a little bit of your income? Like, you don't have, maybe you could skip a party, or you could maybe skip that brand new mobile phone when you already have a good one. How would you convince that person to, really start his investment journey at a young age?
Absolutely. Nothing works like numbers. So I represent Epsilon Money, right? We've got a website, epsilonmoney.com. There are some very nice calculators there.
Yes, I've seen those.
There is something called an SIP calculator. Just yesterday I was at a session for a corporate in Goa, and we put in some numbers, and the numbers came from the audience saying how much can you set aside. So they said I can set aside say 15,000 rupees as an SIP. They were the working class, right? And we said, how much will your money, do you expect your money to grow at? And they came up with certain percentages. We identified ki chalo, it'll be 11 or 12%, because that's what the Indian markets are returning on a consistent basis. So we put in a percentage of return there. We fixed a period of time, And then we saw that even going in with 15,000 rupees for a period of 15 years or 20 years can actually give you a corpus which is more than 75 or 80 lakhs of rupees. So suddenly you see the multiple growth in the money that's possible, and these are pure numbers. And this is how your money is compounding. So if a youngster were to come to me, I would run a calculator like this, and it can be on our website, it can be in pure Excel. You have a lot of such calculators that are there, and you just let the numbers work the magic, and then suddenly somebody is thinking, and he goes back and says, okay, now can I save up these additional 2, 3, 4,000 rupees? Can I try this the way Shankar told me? Can I do it for 6 months, and can I see the value unfolding? So I think that will be one good way of convincing them.
No, but like say for like people who are not really aware, like I know a lot of people who are not really exposed to the world of finance, in the sense that when you say investment, the first thing they say, it could be a scam. What if I lose all my money? Like even if it's a few thousand rupees, they're like, it's my hard-earned money. Like why should I risk it in something like that I don't know much about? So how could you explain what exactly are investments and how is it done? Like there are studies done. Like companies are studied, their past histories and all.
Correct.
So how exactly would you tell someone, try to convince them in the sense that investments are viable? It's not entirely a sense of it's a scam or you're going to lose your money. Because this few incidents of some companies running aground has created that sort of image that investments are very risky.
Absolutely. So rather than jumping to that solution of convincing them, sometimes the key lies in the process. Again, there is this very interesting small episode in one of the immortal fairy tales, Alice in Wonderland.
Okay.
Yeah, where Alice asks the cat, where does this road go? Yeah, and the cat asks her, where do you want to go? Yeah, and Alice says, I don't know. And then the cat says, then how does it matter where the road goes? Yeah. So the fact is that where do I want to go is the most important question to be asked. There are enough and more roads that are taking you to various places. Where do we want to go? So in that goal setting process, that's what we do. And that goal setting process will be different for somebody like me in my life stage, will be different for you, will be different for someone else. For me, just for an example, it may be my child's education. My child is 11 today. He'll be 18 in 7 years' time, and I want to maybe create a kitty for that life stage. I myself am in my mid-40s, and I'm looking at retirement in maybe 12 to 15 years' time. So I want to create a retirement corpus for it. So my goals are these 2-3 distinct goals.
Yes.
My risk appetite. Yeah. So when you talked about investments being risky, etc. Investments are of all types, Shubhashish.
Yes.
Investments can give you everything. Some of them are not risky at all. Some of them are guaranteed. You don't lose money at all. They will give you a certain return that's promised. So investments are of all types. The fact is that it is about horses for courses, as they say. It is about what fits into my goal, what fits into my risk appetite, and that could be different from yours. So for my child's education goal, for instance, I will not want to take a risk of capital erosion there. Because I want my capital to be protected. It's a certainty, right, that I need it. So I may be a little more conservative in my risk appetite there and go for more fixed income, guaranteed income, etc. And maybe very limited equity. Cut to my retirement, I've got 15 years to plan it. And I need that amount to be significant, otherwise it won't be very meaningful at that stage of life with inflation and everything. So there again, I look at maybe more equity, look at more of a growth or an aggressive mindset in terms of my risk profiling, so on and so forth. So it is the same underlying investments, but the thing is their ratios are changing. And obviously with your risk appetite, you're also picking up investments which are in alignment with that risk appetite. So there are the safest to the more risky. It just depends upon what I am planning for, where do I want to go. It depends a lot on that.
Okay. Now even talking about like asset management, so like once you start reaching in, like you start expanding your career and you have a certain amount of capital with you, you start procuring assets, or it calls good liabilities. Can you explain these assets, how do you see things as an asset or a liability that could maybe help your financial goals, or maybe be as a backup or a set of, or a kind of safety net that could be there for you in your future? Like say maybe when you buy a flat, what do you see? Or maybe when you want to buy a vehicle, should you buy a house pay a down payment for a house, or should you buy that fancy car, something of that sort?
Understand. So, asset and liability. The most fundamental, simple definition of it is an asset is something that generates income for you. A liability is something that you're paying out to, and it is not generating an income for you. Yeah, that's the classical definition, and that still holds. So from that perspective, if you're buying a car, while it is an asset because it is doing a set of things for you, financially it may not be an asset because it's a depreciating asset. It is still an asset. A car that you buy now for 10 lakhs is still worth something, so it is an asset. But the only point is that its value is depreciating year on year. So a car is still an asset. A home most likely is an appreciating asset. And for the past many decades it has been, because property generally rises, but not in all scenarios. And not in all scenarios. So there have been scenarios where your property can barely fetch you more than inflation. There are some time frames that your property has not really risen the way it may have risen in the past few decades. And that's why it's important to be mindful of what you're buying and when you're buying, because the environment is also changing. We were looking at some data for where are the physical assets lying for Indians. Where do we keep our physical assets? So majority of it, or rather 95% of it, is in real estate and in gold. So basically home, property and gold. Both are investment avenues. Both have done extremely well. We've had cycles where your property has actually doubled in 3 years' time. And at the same time you have certain phases also where your property is barely beating inflation. It depends on what time frame are you catching. The way we are now evolving, property is not as rosy as it used to be maybe a couple of decades ago. So we need to be mindful that property is important. Property is an asset. It is generally an appreciating asset, but we need to be mindful of these factors. What we now suggest as part of the process after goal setting is something called asset allocation. So never look at investment avenues in isolation. Equity is very rosy normally. Equity is the most talked about asset category. Sometimes equity is the only invested category also for certain individuals. We recommend a certain asset allocation to be in place. So first is I identify your goals. Based on that, there is an asset allocation strategy where equity of course plays a role. There is something called debt or fixed income, which is an important category. These are where there are fixed incomes that come in, they are guaranteed. They also give you some leverage on appreciation. In fact, those debt products have done very well in the last few months because the interest rate movement. The interest rates increased and so on and so forth. So that is one avenue. Gold is the third avenue. Classically, gold has been an inflation hedge, continues to be an important component in your portfolio. And then there are a lot of alternate investment avenues also. So you may have heard of something called a portfolio management service. So PMS is one alternate investment option. There's something called an AIF, something similar to that, but that's for investors with more than 1 crore of investable surplus. And there are many more evolving aspects to investments management. Money growing is one aspect. Money management is another aspect. So with us, we've got something called family office services or trust and will management services. So when you've got your business wealth, or your individual wealth, how do you create a will? Or how do you create a trust to manage your business wealth or your family wealth? These are all areas that are important, that manage a lot of situations, both financial and personal. The long and short of it, there is no one answer, but there is one starting point. And that is identifying where do you want to go.
Keep watching Goa 365. We'll be right back after this. Welcome back. You're joining me with Mr. Shankar, who is a financial expert, a veteran in the field, and we were just talking about investments and risk management and how to really get your financial life, financial aspect of your life in control. So once a person has started his investing journey, has started taking control of his finances, how does he make sure that he stays there? Because initially you grow, you put in everything and you just focus on the starting off, but what happens after that?
I think a very, very, very valid question, because I believe that that's one area where within India and within our overall financial planning landscape,
Yes.
not sufficient attention is being paid, which is the review. So we talked about goal setting in the earlier section. We talked about an asset allocation strategy, and then obviously that strategy is being executed with a set of investment products. Then what?
Yes.
We are in a very dynamic environment. A lot is changing. The world, the external world is changing. Our own personal circumstances are changing. There could be some life stage situations that's all happening. If our financial strategy is not in sync with all that and not mirroring those changes, then it is working in isolation, and our work and our life is working very differently. So as part of our process in Epsilon, we kind of build it in that there is a 3-monthly, 6-monthly review of the portfolio, review of the overall, the overall landscape in which we are working. If everything is going fine and it's all great. If something needs to be reviewed, changed, discussed, then it's very important to do it in a timely manner. The moment you build it into process, it works. You kind of reach out to client comes for a discussion offline or online, and we spend those 15, 20, 30 minutes on it, depending on whatever it merits, and we are saying, okay, chalo, this is fine until the next review. As again quoting the Indian captain, process is what will help us get the results.
Okay. We've spoken about so much about investment and all, but India is, like you said at the start of the program, was at least very savings oriented, right? We would as kids also be taught, you put your money in a piggy bank and keep it for a rainy day.
Right.
But how is the current situation in India, in the sense that we are evolving, right? And also the economy is getting tougher, inflation is pretty high, and we also have to keep up with that.
Correct.
So how would you talk about the mindsets, the traditional mindset to the modern mindset, and how people should start viewing things as compared to what they used to view things back in the 80s or 90s?
A great point, and you mentioned the word inflation. The concept of inflation, very simply put, is my money losing value? That's one end of it. The other is, are the services and goods that I'm buying, are they getting expensive? Both are the same thing. They're just the converse of each other. I remember when I was a child, we used to buy a loaf of bread in Mumbai for less than 2 rupees. That's the
you have to think about that now, and our age is like
40 rupees. Right? Now 2 has gone to 40. But has our money grown in that same ratio? And that's where inflation is eroding our capital creation, our wealth creation. Again, back in the day, the options that we had for investments were what we had. I'm talking about the pre-90s era. It was a pre-liberalization era. We were in a certain mindset. Today, the world is our playground, as it is said. On our platform, you have the option to actually invest offshore as well, which is like global investments. So if you want to buy a stock like Google on the NYSE, you can actually do it through our platform and through a set of global partners that we have. Now that's brilliant, right? We couldn't think of that in back in the day. So your money has got great opportunity today to grow. Our company is called Epsilon. Basically, it means infinity, or it means infinite possibilities. Our money can grow infinitely. And once our money has grown, it can achieve infinite things for us. So the genesis of that word is the fact that your money has infinite possibilities. Today, those infinite opportunities are also there. The point is, if we meet an expert wealth advisor who is able to kind of take us through all these aspects, who is able to align these with our own financial goals, and then we are able to pick some of these based on our risk appetite, based on our goals, then it becomes our journey, and that's where I think we can get our money to work for us while we work for our money.
Also, speaking we've grown a lot, the internet has, everyone has it in the palm of their hands, and a lot of these stockbrokers and a lot of people have made it so easy that you can start buying stocks right off your phone.
Right.
It's as easy as just a few clicks of a few taps of your phone, and you can start buying stocks of, say, Ambani's or Tata's or any other company that is there out in India.
True.
But how risky and how dangerous is this for a person who does not know the risks? So when they approach a financial firm that takes care of this kind of thing, where they have mutual funds or they tell you a select number of stocks to maintain a portfolio.
Right.
But a person who sees they see one stock that is doing the news and they are like, okay, I'm going to buy this. How dangerous is this sort of, while it is also giving the people some power to invest in their own way,
True.
it also has some danger. So could you elaborate a little bit on this?
Yeah, so I would, rather than using the term dangerous, I would say not advisable.
Okay.
Yeah, I am a wealth advisor, and I wouldn't advise one to operate in that respect, because everything is subject to, as I said, the individual's life stage, his requirements, his goals, and so on and so forth. Just picking a stock because it's in the news, and expecting that it will work for you the way you expect it to work, not based on sufficient information or expertise, is certainly not advisable. What are the options that we have for it? Of course, there is so much of good material now. Even if you want to go into equity, you want to invest in stocks, there is so much of good material available today. Yeah, you've got so many websites, so many market participants like us who can give you a lot of good inputs, and it is all there in the social domain, the public domain. You've got equity research entities. Like we also are partnered with an equity research firm with very tried and tested background on equity research, and there are these kind of firms who can give you views on stocks, who can give you some list of stocks that you can look at, you can probe, and then take it on from there on. In addition to that, you can also consult advisors like us or anybody else. There are so many people who are in the trade, right? Would be advisable to do that, and then based on your goals, pick your stocks or pick your strategy. Stocks in isolation are not what you want to do. You want to see where all of it is adding up to the big picture, and that big picture has to take you where you want.
Okay, I'm sorry, I'm going to have to stop you there, and we have sadly, this is all the time that we have. But before we leave, would you like to give out a message to our viewers, be it like the youngsters or people maybe parents or maybe people who are close to their retirement, as to something related to finance that you would like them to know about, some message that you would like to give them?
I think the one thing that I would want to mention is, whatever be our age or stage in life, whether we are a child in school, a youngster in college or beyond, a working professional, or someone senior, close to retirement or retired, the one important thing is that please pay attention to your money. Give it the time that it requires to kind of look at it, see the possibilities in it, and then kind of do something about it. More often than not, we are on a treadmill. We are all doing various things that we are doing, and money management sometimes takes a back seat, and that's where we kind of let our money sit, or we let our money sit in suboptimal investment avenues, if I may call it that. If we pay that requisite attention, once we are paying attention, we are talking to people, reading up, figuring out advisors, and informing and learning ourselves, right, to do better things with our money. So my only thing will be, let's pay attention to our money.
Okay, thank you so much for coming on our show and talking about this, and it's a very important aspect in our life that people don't really pay that much attention to. So again, I tell all our viewers, start thinking a little bit about your finances, and start reading, maybe even meet financial advisors. We have a lot. Even Epsilon is one among them, who help a lot of individuals and companies and businesses really help and grow and manage their finances, so that maybe you never have to face a rainy day getting wet, as they would say. So thank you so much for watching, and keep watching Goa 365.
Thank you very much. Thanks.
Yes.